What's up, everyone? We just finished Ask Alex number 90, and this week we did a deal review. We broke out the Dealmaker calculator, and we're going over numbers on two properties we've recently purchased and sold in the Antelope Valley. Alex, what were your biggest takeaways?
Big takeaways were that we were going in detail why we're buying property in Antelope Valley, and we went into these two deals that have multiple exit strategies, such as one we could build another unit, the other one we could turn into a short-term, mid-term rental. But we went into granular detail. A lot of learning lessons on here. Check it out for more. Let's go.
Alex, you there?
Yes, sir.
All right, let's rock and roll. I'm excited for the review today. I know Alex will give you guys a quick update on where he's at and what he's up to, but I am right now out in Hawaii at our magical property out here. So just getting kind of used to everything on the island. Alex always used to talk about being behind the ball when he was out here on the island. And I'm starting to realize that now too. It's 11 o'clock here, 12 o'clock here, and it's already 3 o'clock there. And you just feel like you're playing catch up all day. So
yeah,
good stuff.
Bro. Absolutely. I couldn't have said it better. I would remember I'd wake up in the morning. And I'm not a 4 or 5 a.m. guy. I've tried. Every time I do that, I'm super miserable. I'm cranky. I'm not a nice guy. And so I'd be in the middle of my workout at like 8 a.m. And then Will's calling me off the hook. Hey, what is that? Because it's already 11 a.m. in LA. So it was I couldn't even get a great workout. It'd be just my phone be, the whole day I felt like I was chasing my tail. It was crazy. So now you're experiencing that, huh?
Yes, sir.
All right, man. Well, thank you, deal makers. As always, same bad channel, same bad time. Today, we're jumping into deal review. We're going to look at a couple of properties, go into granular detail, why we bought them, what we learned from them, what our exit strategies are, a bunch of stuff that, is going to be very beneficial, hopefully, to you guys. So, yeah, man, we're going to be jumping into deal review. That's why we do these every week. We are here to serve. We're here to share with you guys some of the stuff that we're working on in the hopes that you can become a better deal maker yourself and we can help your learning curve out. So I'm excited to go through a couple deals. And
these are fun deals too, right, Alex? I mean, we're going to go over some deals in the Antelope Valley, guys, where we do a lot of our business. Alex is very passionate about the Antelope Valley. It's a place that we've seen a lot of growth and a lot of profit from as well. So we're highly invested up there in the area. As you guys know, we did a bus tour up to Antelope Valley, and we took 40 people up on a bus and got to go look at 7 of our active properties that we had up there that we were flipping and in the rehab and escrow process of. So we're very invested in the Antelope Valley, and I'm excited because today Alex is going to break down 2 recent transactions that we're doing up there, and this should be a really fun chance for you guys to again kind of see inside the brain of how and why we're investing up in these areas.
Yeah, precisely. And I think the big reason that we saw the need for doing this is because analyzing numbers, analyzing your exit strategies is super critical to success as an investor. The better deal that you get, the more exit strategies you have, but also you have to pay attention to what works. And what we notice is that the properties that we're doing in this area work. We're making money. We're using less capital. The homes are newer out there, so they're not as much of a rehab. So many little bullet points, and it's not sexy because frankly, I'd rather be doing flips in Beverly Hills or West LA or some other Hollywood Hills or some cool part of LA, but that's not our business model. And so you have to focus on what works and double down on that and keep doing it until it doesn't work. So that's what we're doing. But yeah, man, you're enjoying Hawaii. I'm in downtown LA.
We switched spots, but obviously, I know you've got a lot going on as well, and you've got some plans coming up this week as well to come out and get on the island also, right?
Yeah, absolutely. I guess the big updates for us or for me on this side of things is I've been noticing that since we've seen this market shift, we're seeing some changes. We've been kind of going back to basics. We've been working much better as a team. We've onboarded some new team members. And so I'm super proud of that. That's one of my biggest passions, the fact that we've been able to grow a team. I've been remote. Now I'm transitioning back to moving to LA, but the team that we have right now is outstanding. I mean, I can't name everybody, but I am so happy for the people we get to work with because they're sharp, they're on it, they're committed. And, it makes our jobs easier, right, Will, where we have people that can support us and we can help grow. So these are things that I'm super grateful for. So that has been really gelling. I've noticed just a lot of synergy, a lot of momentum within the team. We brought in some new private lenders that we've been networking. We take these things very seriously, right? We're borrowing money, we're using other people's money on some of these transactions. I'm using a lot of my money on all this stuff, but to grow the way we have and continue to grow, we have brought in other private lenders, and sometimes we're networking, connecting with these people for 2-3 years before they decide to invest with us. And we're in this for the long haul. We don't plan on going anywhere. So to bring on a private investor this week was great. They invested about $250,000, and so happy to finally to do a deal with them. I'm super happy to be paying them a great return. Also, just so any of you know, we not only provide a great return on our private lending, but we also provide access to all the training courses we've already paid for, so they don't have to pay, which is quite a lot. I don't want to go through the list, but there's like 5 amazing courses that we use to train the team, but we also
thousands of dollars worth of training.
I mean, literally $30,000 of investments that we give them access to. Also, I have property, we have property, so they can go use that house in Maui. We've had several private lenders that, we let them use that house. And how much does it cost to stay at a house in Hawaii that size?
We were looking actually just to check, and it's like literally $500 to $600 a night for a 1-bedroom hotel or condo. So again, it's a big luxurious property that our lenders get access to, and the Maui property, your Mexico penthouse, pretty much the whole portfolio, right?
Yeah. So we're passionate, and we're gonna be adding the Airbnbs that we're putting in Phoenix, and that's only like 10-15 minutes away from Scottsdale, the Old Town Scottsdale, which is
downtown Phoenix, and beautiful. Yeah, so we love it out there.
So exactly. So it's definitely something that we like to provide in addition to the great return we provide our lenders, because we're enjoying these lifestyle things, and so we want other people alongside us that are helping us win to be able to do that. We also closed on 2 refinances that had some bumps in the road there, right? I mean, my FICO score went down unexpectedly. It was just something random. I was on an authorized user account for like my brother or something, and he just kind of, something kind of fell through the cracks there. And my FICO score dropped like 80 points in the middle of these 2 refinances. It was really stressful. I had to, get that deletion off, and that took like a week or 2, delay these projects. Interest rates are going up. Long story short, you guys, I mean, you got to constantly be putting out challenges. And we saw that with this, but we got those 2 refinances to the finish line, paid off 3 private lenders, got some more capital for one of the projects that we're still working on in Joshua Tree. But I was super stressed out about it. We got it to the finish line as a team, and we got it done. So that was done. And then I've been having some great big relationship meetings here in Los Angeles and SoCal. Sometimes you overlook some of the things that you should be doing that are very valuable to your life, your business, because you're not there. And me being remote has, obviously its advantages in some ways for my lifestyle, but then the reality is I can't build the same relationship with someone remotely as I can taking them to lunch, having dinner with them, having them come to my office.
Face-to-face interaction is just priceless, right? Like
belly to belly. So I've been driving around all over, and you know how much I do not like driving. But
the big relationships, you got to put that work in, right?
Yeah, I guess. So I've been maybe like I had about 4 or 5 big meetings with people that respect what we're working on, see how there's some alignment there, how we could help each other grow. And I just had a meeting with Jorge Contreras. He's an Airbnb expert, a coach, and that was a great meeting. I had another big meeting earlier this week with a big broker in South Bay that, for them, like anything under $1 million is like, we don't even want to touch that. And that's kind of our bread and butter. So it's like a lot of alignment there where he could potentially give us deals of properties that, that they don't even want to touch, which is a great fit. Would you agree? And so that, and then I am going to Hawaii. I'm going back. I have not been to Hawaii in over 2 months. I'm super excited about that. I'll be a week in
Islands miss you, brother.
Yeah. Aloha, mahalo. The water is calling my name. The surf is calling my name. The turtles are calling my name.
I just saw a turtle yesterday, and he was like, "Where's Alex been?" And I was like, "Man, I don't know, bro." And he was like, "Well, tell him to come by." And I was like, "All right, he'll be here soon."
So I am definitely pumped. I am pumped to get into that water and hang out in Hawaii with you and with all those cool people. So I'll be in Oahu for a week, leaving on Sunday, and then I'll be in Maui for a week, leaving that following Sunday, and then back over to LA. Another big thing is, since we've been going back to basics, I talked about this on the webinar often. Habits are important right now. A lot of bad news, a lot of negativity out there. You got to go back to basics. I've been reading a lot more. I've been meditating. I've been waking up earlier. I've been hitting the gym. I've just been locked in. And I think that also affects the team because they're seeing, the intensity, the focus that we need to be at right now. It just right now things are moving really fast. So that's big. And then I'm also I've been working on, you've probably never seen it on this webinar, but I have sometimes a little bit of a temper. I can kind of just get like kind of quick, get irritated. So I've been working on that because, things don't always go according to plan. And we always have to be working on our character flaws. Bottom line, if you're not working on your character flaws, the things that, are not your best, things of your character, you should be working on it. And by reading more, by being on better habits, by being more focused, it's allowing me to also work on those things too. Of just getting, hey, calm down, Alex. And so those little wins for me are important because I want to get better. And that's not like overnight. And especially if it's something where you have a bad habit over years, that is not easy to change. It's because you want to. You want to, but it's really difficult to change when it's something you've had for a long time. We'll talk about this in a bit, but on the family side, I got to take my dad to football games. Thank you, Will. Will has a 9-to-5 where he's a top salesperson for the LA Chargers. So reach out to him if you ever want to attend the game. That stadium is unbelievable.
It really shows what real estate development is at its heart, right? Like a $5 billion project smack in the middle of LA that just sent ripples all the way through South Central, Inglewood, Hawthorne, Lawndale, Gardena, all the way up to Culver City. Like it just really changed the demographics of LA with that stadium. And that's what real estate investing can do, right?
Yeah, absolutely. It's on its biggest scale possible of billions of dollars of investment to see that. And I saw that development from literally when they announced it to when I was in the seats for the first time last year when I went. And it's just special because I think I did like 17, 18 deals for the other investor that I was working for at that time around that area. And I could remember vividly how many listings would say once it was announced, a listing would say, because we would buy a lot from the MLS, 2 blocks away from the new SoFi Stadium, 2 blocks, always like in the listing. And then I started to see the prices increase over that time as, it got closer and more happened because you got to follow the money. When when a group is investing billions of dollars into a development, naturally it's going to affect the real estate around it. So
we talk about that on smaller levels as well, right, Alex? Like when we go buy a property and we see a new development, a 100-unit apartment building coming in a couple blocks over, we know, hey, somebody else is building 150 apartments right here. They're putting a lot of money into this neighborhood. We should feel comfortable investing a couple $100,000 into this neighborhood as well.
Absolutely. And another example of that is all the money they're putting in like into downtown Los Angeles and what's a little bit east of downtown Los Angeles.
Exactly.
East LA, right? East LA. And you've seen the values of East LA skyrocket too, where you had these houses that were in very rough neighborhoods, working class neighborhoods, but with sick views of downtown LA. And from a house that you could buy for like $300,000, now it's like $700,000.
$700,000, yeah.
Yeah, because of all the money that is going to those developments, and then people can then commute to downtown LA within 10, 15 minutes because they're very close logistically. So those neighborhoods are transforming, increasing in value as well. And you're seeing also a lot of development where you have these houses being torn down and it's like and this house being torn down and then this other house being torn down and they're combining the lots and they're building a 20-unit building. Like that's what you're seeing in certain parts of the markets that you're in. And that's applicable to wherever you're at. Just pay attention to where these big developments are at because naturally the real estate around that will increase because of all the money that's going in and how it's being transformed. Yeah.
Money follows money, man.
Money, well, follow the money, man. Follow the money. Aside from that, okay, one big thing too is because I've been focusing on my habits, I went over to there was this hike I've been wanting to do for a really long time. It's in the Verdugo Mountains. And if you go to the Verdugo Mountains, that encompasses Sun Valley, Burbank, and Glendale. So on Sunday morning, I started at 9 a.m. and I did a 5-hour hike and it was like almost 12 miles and it was difficult. but you just got to push yourself, and that's that's in business, that's in life, and you just got to conquer your mind. And there were several times I wanted to quit, dude. I was just, oh man, this is too difficult. Let me just go down this other trail. But I had set my goal. I want to get from one part of the mountain, of that mountain range, all the way to the other part. And then, what, here's something real quick, funny, Will. So I'm like, I'm on top of the mountain. I'm in the middle of the mountain. I haven't seen anybody for probably about an hour. And then I'm sitting in the shade, just drinking some water, kind of just resting for a little bit and thinking I'm hot shit. I'm like, yeah, man, I'm a beast. I'm up here in the mountains. I feel good. And then some guy turns the corner with no shirt, ripped. He has two like dumbbells with him, and he's running at a pace. I'm like, holy crap. Like, I thought I was in good shape. This guy is a beast. And we just kind of gave each other a nod. I'm like, all right, bro. So the point with that is there's always another level, right?
There's always that next person ahead of you, right?
Yeah, this guy was this guy literally had weights with him, and he had to been up there. Like, we were at the top. I barely saw anybody, and this guy just turns the corner. I'm like, whoa, this guy is a beast. So that was cool. And see what else. Oh, last but not least, since I'm transitioning, moving back to LA, my house in Hollywood is practically done. We have it at the finish line. We finished the refinance. Super happy about that. Shout out to Amari, our project manager. He's worked diligently, and I've been on him. I've been changing the design. Scarlett also, that's helped us with the design. I've been very picky on certain things because I'm going to be living there, and they finally got it done. We're getting the furniture in there, and it'll be done this weekend. So that's my update, you guys. I know it's a little bit lengthy, but I think there was some learning in that I wanted to share. But I'm ready to talk about some deals.
Yeah, let's get into some deal review here, because I know this is, obviously one of our favorite webinars, right? Like, this is, your guys' chance to see how Alex and I analyze a deal, how we use our flip calculator to make decisions. And I'm really excited about both these properties because, like we said, these are in a market where we are heavily invested. So let's go ahead and break these open, Alex.
Cool. So I'm going to share my screen. What we're going to do here is we're going to look at the aerial view, kind of go through the same thing we go through when we're analyzing a deal, but we are going to go into granular detail on some of the benefits or what we saw as the reasons we wanted to buy this property, and also what we plan on doing with it, and all the things, all those details. We're going to jump into the numbers. So pay attention. If you have any questions, let us know. So we'll jump in. So which is the first one we're talking about? Is that Fern or is that 18th Street?
Yeah, we'll go ahead and get things started off here, guys.
18th Street. Okay.
Yeah, we're gonna start off with the property that we are currently in the process of closing out on a refi to hold as a rental property. So we'll kind of dive into this one and show you guys a little bit about how and why we bought this one. This property, when Alex pulls up the aerial map, you guys will notice it's a very large, oversized lot. Those are usually very attractive for people living out in the Antelope Valley. So Alex, Antelope Valley is a tertiary market for Los Angeles because, LA is the core LA, and this is still within about an hour to an hour and a half drive from core downtown LA.
Yeah. Can you see my
yeah, we see your screen on Google right now. Yes, sir.
Great. So first thing I want to highlight real quickly, what do you see here? Right?
That's a freeway.
That's a freeway. So there's the 14 freeway. For some of you that are not familiar with Antelope Valley, we zoom out. Let's just zoom out real quick. So this is kind of the core Antelope Valley. Now we do invest in other areas like Rosamond, Mojave, California City. Those are a little bit more out, lying areas, but this is the Antelope Valley that we kind of try to focus on. But like I said, we've invested in those other ones and they've done great. But the thing is I like that, okay, this is logistically close, right? If you're going to have a rental property, if you're going to have a property that you're going to flip, whatever that is, if it has a good location, you're probably going to have more end buyers or a better tenant pool. So we really like that. And if we go to the satellite images, you can see here, like, it's this entire lot right here. So it's a really big lot. And then when we went to
most lots in Los Angeles, Alex, are about 4,000 to 6,000 square feet. This one's nearly 4 times that. This is a 20,000 square foot lot almost, and again, that is a big difference. Yes. This property has multiple sheds on it, storage areas, things that are usually deemed pretty valuable out there in the Antelope Valley.
Yeah, and so on the surface, it just looks like a, just a small house in the, the desert part of LA County, nothing too crazy. But if you know your markets like we do, we begun to understand that. Again, I'll zoom out real quick for purposes of educating you guys. But the west side of Lancaster and the west side of Palmdale, there's actually is really nice. The neighborhoods are safer, and it's the east side that could get a little bit of rough, get rough and just be a little bit more hood. Whereas the west side is pretty good. So we're technically kind of on the west side. I remember when we talked to our project manager, Paul, the rocks are out there that helps us get those projects to the finish line and also partners up on some deals. Well, he was like, dude, this is a good neighborhood. You should probably keep it. Because he has a rental portfolio of over 20 doors. So he's like, yo, like, I mean, if you don't want it, like, maybe you can wholesale it to me. And, I'm like, yeah, I'm all right, bro. But thank you for, for the feedback. And so we realized right away, it's a good neighborhood. It has that. And then we also, when we ran title, we saw that, it is zoned for potential small multifamily. So we can add another unit back
add
here.
Units if we want to.
Down the road. Now, it wouldn't be the first thing we do, but it is something that, we can add that unit back there. And then you want to hear something funny or something interesting? Well, when I was out there with Paul looking at the finished product, because we just finished it, I was talking to this neighbor over here, and he's like, yeah, do you know that this neighborhood has its own kind of water company? So we actually, by owning this property, we have part ownership in that water kind of company that's separate from Edison. So I didn't even tell you.
Did not even know that. So that's pretty.
So which is
pretty
good.
cool.
And he's saying that means, and we have some of the cleanest water there in Antelope Valley. We could drink out of the faucet there. And that's what the neighbor said. He'd been there for 30 years. And what was interesting, we just walked across the street. We're talking, we're introducing ourselves, and then he was telling us everything. If you talk to people, they will give you so much information. Because they
scoop on the neighborhood.
Neighbors, most of the time, they want the neighborhood to be improved. And if you're buying this property that's kind of dilapidated and you're going to improve it, like, you have a good card to play, right? You're going in there, you're making it better. So, you can open those conversations, find out more about the neighborhood, possibly even find another deal. He said he might have somebody that's interested that's selling on the other side. I'm not going to tell you which address, okay? But you know what I'm saying? He's like, I know somebody that might want to sell on the other side of the block because these people know their neighborhood. They've been there for 30 years. So again, you gotta see what I want to make a video about this. Like, you gotta get great at the office work and the field work, right?
The field work is critical, right? Yeah. You can find a deal on the office side, but you can find one just as well in the field, right?
Yeah, everybody wants to go in the field and look at these ugly houses, or just kind of that's the fun part, just going out there. But if you do a great job in the office work, then you can get to the field, and the field work is more meaningful because I'm going out there and I own this property, and I'm going there and talking to the neighbor, and I'm building rapport there, rather than just being in the field to be in the field to look at houses. Like, they're both super important in becoming an investor and being great at what you do. Is you have to master both of those skill sets, and they just require different skills. And I love both sides of it, but I do prefer being in the field. But I know that if I do a great job, with the office work, then the stuff in the field is more meaningful, and it was going to make us more money. So, so here's the deal. I think we were going to pull up the comps, but so first thing, we look at the property, we like it. We got this property on the MLS, correct?
Yeah, this one was a MLS deal.
Okay, so typically, go into the MLS, we look at the comps, see, trying to get our ARV. So let me pull up the comps. If there's any questions, you guys, this is also interactive. I was
going to say, yeah, please use the chat feature down there, guys. If you have any questions, I see somebody was asking about the zoning. What's the zoning here? And David, like we said, this is, zoned for small multifamily, actually. So it's, a really nice zoning that we got on this property. Again, when we're kind of looking at these properties, guys, and you see the houses across the street that are just bigger properties, like, that again shows you like, hey, there's even some other houses down the road that look like they already have the small multifamily. And that gives you that same idea that Alex was saying about SoFi Stadium. You can see that other people are investing in this neighborhood. And that means that if you're investing in it, you're probably going to see some good returns that they did as well.
Yeah, let me bring up, okay. So can you see the MLS screen or no?
I do see your MLS screen. Yes, sir.
Okay, cool. So, we put in the MLS here. We'll take a quick look at it and then give us some comps. Bear with me here. Okay, so within a half mile, we pull some comps here. but look at these comps real quick, right? We bought this house for $240,000. Now, I still have to do some filters that filter out some of these bigger properties, newer properties. But from a glance, we have 24 properties here. And what do you see as these numbers? 4 3s, 4s, 5s, 6s, 6s over here, sold property. So I'm buying a house, and I tell you guys this a lot. So please, you should write this down. You should be targeting properties at the median price point or below for that neighborhood. I'll buy a house in Beverly Hills.
So Alex, you're not going to buy a house out here above 500K, right? Because that's going to be above the median.
Yeah, exactly. Typically, we like to buy houses in Antelope Valley for under 300. But if it's a neighborhood of 600,000, generally speaking, yes, we will buy it that. But my point was like, I don't mind buying a higher end property. Say I want to buy a property, the average house is 1.5 million, but I'm buying that property for $900,000. I'm going to probably buy that deal, right? So you always want to be buying under the median price for that area. You don't want to be buying in that neighborhood that's a $600,000 neighborhood and you're buying it for 550, trying to sell that for a higher price or try to do something like that, because then you're the most expensive house in that neighborhood. And then as the higher price point gets there, they have options to go somewhere else that's a superior neighborhood. So
Yep.
You guys follow me on that? Give me a thumbs up or give me a comment if that makes sense, because that is something that I've learned over time, that I will not buy unless I'm buying typically under the median price point for that given market. All right, so let's do another little filter here, because our property is, I think it's a smaller house. So I remember I used to think badly of smaller houses. But the reality is people don't really want bigger houses anymore, because people are not, these things are changing in the world and people just don't really need as much space. They're not looking to get that huge house. People, with Airbnb, with, the way the world is just evolving, it's just not as important for people to have this huge house as it once was. So we look at the house here and we see, oh, they didn't even change this yet. That's funny. Here we go. So the house is 744 square feet. But let me tell you something. That's why you have to visit property, because it feels a lot bigger than 744. And they enclose a
back patio area.
A back patio, which is, it just looks like a normal room. It doesn't even feel like it was a patio or anything like that, right? And so,
but it feels more like 1,200, maybe 1,100, a little bit bigger.
Yeah, and so you are able, if you look at property consistently, you'll see mispricing, you'll see opportunities. You'll see a property that, wait a minute, this is 1,000 square foot house, but it feels like it's 1,500. So, these are bonus areas that potentially can make or break a deal or turn a good deal into a great deal. And that's what we saw with this property, where it has a 20,000 square foot lot. Where's the zoning here? I think the zoning was over. Yeah, the zoning. So here it goes. Zoning is, so we looked at the zoning with Antelope Valley, and it does permit for us to build two to 4 units on the property. And so once we figured that out, we did our due diligence. We're like, whoa, this thing has a lot of upside, and we got it for, I think, was it 240? I forget. We buy a lot of houses, so honestly, I don't even know all the details. But I know let me see. Here we go. 18th Street. Wait, where's?
Yeah, we bought it at 247. You're right.
Sorry.
Yeah, it was 247 purchase price.
Yeah, 247. Okay, I knew it was close there. So this is the calculator. We'll get to that in a second. But we're going in granular detail. Please give me a thumbs up if you guys are following along. But when you're looking at comps, we looked at it. We're like, okay, well, this is a really good neighborhood. All these data points, the project manager is saying, hey, this is an area that you want to keep. We see the potential for the upside there. We do know that we could flip the property if we wanted to, because it did hit our numbers. And then we just, analyze the comps, and we said, well, this is a strong purchase here. The comps are different now than when we ran numbers 4 or 5 months ago. But I just wanted to show you that when we're analyzing deals, we're looking at the aerial, we're looking at, the comps, we're looking at the details of like the title of the property to see if, there's other potential stuff like we just mentioned with, especially with how much ADUs and those type of accessory dwelling units. For some of you that don't know what that means, it's when you put an additional unit on a property, and the appetite for the state of California, because of the affordable housing crisis that we have, is very high. So they are promoting this building. Now, I will say this though, if you're going to build an ADU, you probably want to build an ADU at better building an ADU in a higher rent area than an area that maybe is lower rent. Because if you're going to spend the same amount of money, spend $100,000 build an ADU in a neighborhood that's going to command, $3,000 in rent compared to spending $100,000 that's going to command $1,500. You're better off building the ADU on a neighborhood that's going to get higher rents. You guys follow me on that? Yeah. Okay. Good.
Yeah, and we had a great question coming in from Daniel, just asking about, how we can get access to MLS. So obviously you have access to Redfin and, Zillow, things like that for free. But Daniel, a great way to get access to the MLS is connect with agents that already have access and provide value for them, and then they'll provide value for you. Maybe that's guaranteeing them the listings, or saying, hey, if I get somebody that wants to list instead of I want to buy, I'd be happy to connect you with that listing, so that you can take that listing down, and then I will just focus on the houses that I want to buy.
Yeah, it is something about, something that you have to kind of figure out. It isn't something that typically you could just call an agent, they'll give you access to it. There are also ways where you could become an assistant for an agent. What I've done, we've done that in the past too. So we become an assistant. You don't have to be licensed in many MLSs to be, you won't be able to upload listings or anything that a normal agent can do, but you can become an assistant, get MLS access. And it's so important to get MLS access if you really want to do deals. It's hard unless you have like PropStream. So PropStream is also very comparable, but I'd say MLS is superior because of
MLS is a data aggregator, and it's the best because it is the main place where the data lives. And that's all this is Alex is able to type in different numbers like he's going to do right now. He's going to change the living area. And that is how you are, able to sort through that data.
Yeah, so I'm going to put it, how the title says 744 square feet, but remember, we know that the property is a little bit bigger. So I'm gonna stretch it out. Typically, you don't want to compare your house more than 15% variance. So if it's 1,000 square foot house, you don't really want to compare it to a house that's over 1,150 or smaller than 850. But generally speaking, you could stretch those numbers a little bit, because what if a house is like 16% larger than yours and you're too rigid with your criteria? So you do want to have a little flexibility there just to get a better view of everything. But I'm going to increase that to 11, anything under 1,100 square feet or below. I want to see what that looks like for that same area. Now we have a more, I would say, filtered down search. And typically I like to have 6 to 8 comps. There's only 4 here, but it does give me a window. Okay, look at 378, 390, 440. And then we locked it up at 247. And we know based on our project manager walking the property that we can get this thing rehab for about $40,000. Okay, we're buying at 247. We got to put about 40 into it. We're going to be into this thing about 300,000 or so, right? And we've seen comps in the high 300s, and then it has all this other upside potential. Then you guys see where we're going with this, right?
And then we actually ended up only doing, I think, 31K of rehab because we kept it as a rental, right? And instead of putting in the nicer flip finishes, those are all, and Alex talked about this earlier, right, guys, is when you buy right, you get those extra exit strategies, right? And you get the luxury of being able to choose between certain things.
Yes, absolutely. So yeah, we only ended up spending 31,000. Our projected budget was 40. I wish to God I could tell you guys that happens often, but another
that was a pleasant surprise when I saw that. I was like, really?
I was like, yeah, nice. Only 31,000. Okay, give me some room. Now, like you said, though, it is a rental rehab. Now, we were going to flip the property. We would have spent probably closer to the, maybe the 36, 37, 38, because we would have done nicer finishes. But because it is when it's a rental, these tenants kind of beat things up, and you don't really need to spend as much on the higher end. But if you want to get top dollar from a flip and from a retail buyer, you typically do want to make sure that thing's dialed in. So yeah, so this is just an example. You see small days on market, and look at this. Only this property here. Oh, this sold for 20,000. This is a 20,000 square foot lot as well. This is a very similar property. Oh, this one's across the street, I think. So this one sold for 378. And look, this one sold for 378. It's essentially, I think, a flip too. Or, well, it's not a flip because, well, actually, I'm not sure. I gotta look. And there's this other kind of beat up house behind it. I remember this comp. Now I remember looking at this comp. I remember being like, okay, well, we don't have another structure exactly like this one over here. Look at, there's like this beat up structure, right?
I think that was the mobile home they had in the back.
Yeah, but we do have an arch. Is we have three big storages. Look at, we have this huge storage over here. We have these 2 other huge storages. So they're not living areas, but I mean, it's very, usable stuff we can use for storage.
That back one, you could convert into an office or a yoga studio or an artist studio, and either the sheds are massive, sheds as well.
Yeah, and you want to pay very close attention to your comps. You want to pay attention to the the details of the description, so that way you really understand this house just sold across the street. What does it have that mine doesn't have? What is the condition? Because when we look at the pictures, we're like, whoa, look, yeah, it's nice, it's kind of dialed in, but you see there's not that much on the landscaping, a nice flooring. You got to pay attention real closely to the comps, because pictures can be deceiving. A house can look better than its condition from pictures, but it also could look worse. So keep that in mind, everybody. And you can see, look at this. Like, they didn't really do any cabinets here. They just painted. They did some nice flooring. What else? You see these doors don't look new. They just painted over them. These cabinets, I think that they might have they might have just changed the faces of them, or it might be new. Nothing crazy with the tile in the kitchen, right? You even see some old, I think. So my point with all of it is that you really you still see paneling over here. So my point with it is that pay close attention to your comps right now more than ever. So then you can look at this sunroom. It looks like shit. Excuse my language. Like it just so.
Our enclosed sunroom looks a lot better than that one.
Yeah, and then look at this. I mean, look how crappy. I mean, if I were an agent, I wouldn't even put that picture. But yeah. So that's a direct comp, what we call kind of like a like for like. So that made me feel really good. Even though the house was listed for $399 and only sold for $378, we felt like our house was going to be superior, or at the minimum comparable to that, and we're buying it for $247. So these are the things that you have to pay attention when you're analyzing your deals. What else? Let's look at the numbers. So when we analyze the deal, let me just do this here. Okay. Because I know sometimes these numbers can get really hard.
Zoomed in helps out a lot more. Thanks, Alex.
So for some of you that are new to the webinar and haven't been on it, I know you guys a lot of you are familiar with faces, but some of you are not. We have a free flip calculator. If you want this calculator and instructions, a tutorial how to use this calculator to evaluate deals, go ahead and put your email or something, so then we can send it out to you. I don't know how to, or you could DM me on Instagram. My assistant will send you this out. But
I just sent out the Facebook group link as well, where everybody can get in, and there's a copy of that recording on there as well.
Yeah, so the powerful thing about this particular calculator is that we're going to go through a base case. For us, this is what we feel very confident in. We've vetted the deal. Does it hit our minimum numbers? We have a minimum projected profit that we want to hit on all our deals. Does it hit all of those numbers first? And then immediately after that, we go into the worst case scenario, the most pessimistic that we could think, but also being realistic. We don't want to be overly pessimistic. We just want to say, hey, if we don't hit our rehab budget, if we don't hit our ARV, if things take a lot longer, what does this deal look like? Will we lose money? What does that scenario look like? And in this case, let's talk about base case first. But in a sense, we saw that, hey, we're going to buy it for $247.5. We saw an ARV of 366, and you can see that's kind of conservative. Like we could have put it at 375, 385, maybe even 400 if we want to be really optimistic. At the time, the market wasn't shifting yet, so we could have been overly optimistic. But that's our business model. We want to be, we don't want to be too pessimistic. We want to be accurate as possible on there. And so we estimate a rehab budget of $55,000. We blew that out the water. Again, shout out to Paul for doing that. 120 days. So again, for some of you new that are starting, this number, how many days we're going to hold the property, is based on, I don't know why this is not here. So this would be like rehab. Can you see this, Will?
Yeah, your rehab number over there, your listing time,
right? And then you're looking at escrow
period, and then
we're looking at for some type of pad. Some type of pad or something like that. So we're just in case. So what you end up doing is you're calculating by each category of the hold of that property, how many days. It's 133 days. We put 120, but because I think the rehab on this one, we would have calculated, we can get that done, I think, in 45 days or so. So let me see. Yeah, I think that's so 118 days, and we put 120 days that we'll be holding the property. 366, we're going to be able to resell or refinance the property. And then our minimum desired profit is $35,000 to $40,000 in the Antelope Valley, with a minimum of 30% annualized return on investment. And you see it hit our numbers because our deals are usually 4 to 6 months. And then if we get 30% on our money or our investors' money in a year, that ends up really being double that, right? Where it's like essentially 50 to 60%, 50 to 60% return on investment. That way I can afford to pay a private money lender 10%, 15% return on investment because they're winning alongside us. And then we have a solid deal that we call these base hit deals, that worst case scenario. Let's go to the worst case scenario, because again, the number one thing with investing is you don't want to lose money. Can you hear me?
Yeah. Oh yeah. No, I mean, the worst case scenario is the most important category for us, because that really is where we determine our risk, right? Is this a property that we're willing to risk losing $8,000 on if everything were to go completely wrong? You know, that's very heavily weighted towards that worst case scenario, right?
Yes, exactly. And then so that worst case scenario is showing $8,613 we would lose. I'm okay with that. You know, like we would only get $330 for the property. We blew past our budget to $60,000 when we felt we could even do better than 55. It took longer, another month. All that stuff considered, we are only going to lose 8,600. I'll take that loss, because it's just part of doing business. You can't expect, when you're doing volume, we're flipping 25 plus houses a year. We can't expect for every single one of them to make money and never have a loser. So I'm okay with that. But what I don't want is that if this thing is, you know, like the worst case scenario or something like that, let's say it's this, and it's like, shoot, we're losing $600 or $60,000. That's a huge loss. I could stomach that, but I don't want to do a deal like that. So we're teaching you guys to think that way, because some of you are taking some of these thin deals, or you're thinking so optimistically, you're not looking at the negative downside, and then that's more important than the upside. We're gonna get to the upside right now, but you get what I'm saying. So okay, cool. Next, though, let's look at the best case scenario. Look at this best case scenario. We're like, shoot, if we knock it out the park.
That other property was listed at $399, right?
Yeah. So the other property is listed at $399, didn't get it, but we felt we were very similar or better. Or, you know, we would have, you know, some find the right buyer, or something would happen for us to, you know, just get the best case scenario where we under budget, we get a bidding war, and we potentially will get, you know, close to 400,000. But look at that return, almost 100% return on investment, making $70,000. And you know, I love that, because that means if we put 20% down payment, and then we did the rehab out of our own pocket, which many times we use the lender to do a draw schedule, and they provide the construction budget for that, and we just have to spend $20,000, $30,000, and then they reimburse us, and then we use less cash. But in this scenario, we calculated we'd have to come out of pocket 100% of the rehab ourselves, but then we use 100,000 to make 73,000. Oh, those numbers, I love those numbers all day long. All day long we could do that. And then so yeah, so that's how we looked at it. We bought the property. Now, any questions? I think we covered the numbers. We covered that. We're kind of running short on time. I want to talk about.
Well, yeah, let's just real quickly go ahead and put in the final numbers. So 247, 366. Let's put in the 31K rehab.
Here?
Yep. Okay. On the base case.
Okay, so 31,500 to stay. It did take a little bit. It did take a little bit longer than we expected, though. So
yeah, and 380 is what our lender gave us as an after repair value of the property. So that's what we're looking at.
60%, and remember that's over 4 to 6 months, or that's a 5-month thing. So I mean that's over 120% potential
on an annualized.
Yeah. And you know, with that we can win with other people all day, and that's a deal that, I mean, I'll buy all day, every day. So any questions about that?
No, I think that was a great deal to review, Alex. Let's talk about a deal that we're buying right now.
Well, I don't want to move on real quick, because this is the beauty of real estate. I want to share with you. So since I'm moving back to LA, and I want to spend more time in Antelope Valley, I've been thinking about getting an office there. I used to have a small office before. It helped me kind of brand myself like, hey, I'm an Antelope Valley buyer. And so what we're doing is we're going to make this property. I'm working with a designer right now to make this property to like my second house, office headquarters, basically just, you know, use it as potentially more than just a rental property. Sure, we can do rental property. We could cash flow, I think, somewhere around $600 to $700 realistically on this, but this will likely just be a property that we can use for purposes of business that will help me make more than, say, if the cash flow is going to be, say, $10,000 positive cash flow for the year, I can make
that could be one deal.
We can make a hell of a lot more money by buying a couple more properties a year.
$70,000 profit on this deal. We could do that. We could run circles around that 10,000.
Exactly. So just kind of, you know, and we have that choice, and we could always turn it back into a long-term rental, you know, if we want to. It's just one of those things I noticed, like, hey, if I'm going to be going out there, I don't want to be making the commute back and forth to Hollywood. And I want a place that I could just rest my head after a long day grinding in the hot sun over there in Aloha Valley. And this property, it seems like that's going to be the fit. And we're working on doing that, because you have choices on what you do with this real estate if you buy good enough deals that can help, improve your lifestyle, improve your business. And that's the power of real estate. So on to the next deal. Fern, let's go, baby. When I saw this,
so this is one we're currently buying, in contract, scheduled to close here in the next couple days. Really exciting thing about this one, when you look at the aerial view right here, guys, is Lancaster has a downtown area, Lancaster Boulevard, and this property is within walking distance of all the bars, restaurants, little shops in Old Lancaster.
Look at these buildings. Look at how nice this building is. When you think of Lancaster, you don't think of this, right? This is beautiful. Look at the nice streets.
Great landscaping, beautiful tree-lined street.
One of our, I remember we'd go down there to, remember the Don Sal's, or what is it? One of those cantinas. There's a little museum right here. And you just clearly it's good location to the core of this Lancaster, downtown Lancaster. So let's see here, things. Okay, so the property's right here, downtown Lancaster. It's all right here. It's like really this whole stretch. So right when I seen it, I was like, how much? Where's it at? Buy it. I like it. I didn't even have all the details because I know this area haven't already done.
It was the price, yeah. Right, we're buying under. I think we got this one under contract in the ones. And anytime we're buying a property in the ones out in Lancaster, like that's always going to be a win, right?
Yeah, it's a nice church across the street. Also, there's what was pretty cool. This is what we noticed too, is that this property across from us is like a business. It's a house, but it's being used kind of like okay, so here it is. So if you look at this business,
it's like a party design company for women.
Yeah. So it's this, yeah, exactly. So some of these properties will have, it'll be zone commercial, so they actually could run a business out of it. But look, it's nothing sexy, right? It's just it's like shotgun style house. It doesn't even have a garage. Doesn't even have a garage. This is just like a little storage, and it's a thin lot. But ladies and gentlemen, we're buying a house in LA County in a good location for that particular area for $173,000. And
hard to lose.
It was listed for $209,000 on the MLS. So for all of you who say there's no deals on the MLS, you're just not looking hard enough. I don't want any excuses. We are buying houses on the MLS in this market. What do we get?
And this was actually one of our acquisitions guys' first deal.
Yes,
that our guy Omar took down, and this was one that Omar found on the MLS.
Yeah, Omar has been. We found each other through Instagram. He was intern for like 2 months with us. I flew him out to Hawaii. He helped me out a lot. He drove me around. He put up with my bad attitude. He just everything, bro. And then now he's like helping us with acquisitions. And then he's part an investor on our 18 unit. So these are the things, guys. Reach out. We have opportunities, but you have to put in the work. Omar, he has another.
Omar has put in the work.
The kid shows up, he puts in the work. So, that's what we're always looking for, always looking to attract other people that are hungry, that have the desire, that have the commitment and willing to work, and then they can earn their way into our system. And now he's going to make, 15% of all the equity of this property because he's putting in the work. And, shout out to him. He's actually right here helping me out. He's been helping me out all morning, get stuff done as my plate gets fuller and fuller. So Fern, we looked at this property. I wanted to buy it from the beginning because of the location. I think that, this was a Boss Chick coffee bar. So I'm like, all right, cool. So maybe we can do a short-term rental or a midterm rental. If I got a business right across the street, we got another, we got a church across the street. This is by downtown. I'm not thinking of this as a long-term rental. I'm thinking of this as a short-term or a midterm rental. Midterm rental is a term that you might not have heard. It's when you rent to traveling nurses, to students, executive, like kind of almost like corporate rental, like someone needs to stay for 30 days. So that type of property, it is a smaller property. It's not like, one of those things that it's large. So we have to maximize. I thought of that one as maybe the office, something we can do down the road. So that's what we figure. We're going to do a short-term, midterm rental on this. We're buying it for $173. Let me pull up the comps real quick on the other screen. Any questions, guys? Come on, this is interactive. We're literally.
Yeah, we had a great question come in, Alex, and I want to kind of go over it. It was from Daniel, and Daniel was asking, how are we estimating the rehab on these properties? And I know you can kind of show us really quickly, on the calculator. Once we get to this deal, we'll kind of show you guys how we estimated our rehab on this one. But it's a combination of exactly what Omar said. It's we use our past experience, we use bids from our contractors and our project managers, and we complement that by using data that we've learned from books like the book on estimating rehab costs by Jay Scott, to come up with these square foot estimates, and then we verify those estimates with bids.
Yeah, exactly. So the way we estimate rehabs is number one is that we typically use a formula, but that formula for us is changing because it's based on active deals we're doing in the area, and also by having trusted project managers walk the properties or look at videos of property walkthroughs and give us an idea, and or because sometimes you might do a property walkthrough, you can show that video to a project manager or somebody you trust in that has construction knowledge, and they can help ask additional questions. Hey, what's going on with the foundation? Or hey, what about this or that? And the more and more you do that, the better you get. Because the thing is, in acquisitions, or if you're on the front end, if you're more on the sales side or the acquisition side, sometimes we put the project management or we put the rehab side of things to the side, and we don't really put that much value of learning that side. For me, I hate construction. I really do. I love seeing a beautiful product and I love giving feedback, but I do not like managing contractors. I didn't grow up, in construction. I'm not a handy guy. So, this is something that is really foreign to me, but I've had to learn it. So first and foremost is you have to dedicate yourself to learning it and not be just like, okay, using this excuse like, hey, this like, I did for a little bit like, I don't need to learn that side. I'm good on the sales side. I'm good at negotiating. No, you need to get good at estimating rehab, or at least being within the ballpark. So that way you're not too pessimistic on the offer, but then you're not too optimistic either. So yeah, we had our project manager look at the video. He didn't even actually drive. He didn't go inside this property, but because he knows the area so well, and he watched the video, and the property isn't that much. You see the inside and you see the outside, and then that's really, and we're buying it for 173. Look at these numbers. Again, ours is smaller. I think our property, our property size is what?
I think it's 697, somewhere in there, 690,
644,000. I'm sorry, 644 building square footage. So it isn't a big property, but if you look at here at the comps here, what do you see? I pulled within a half mile all the houses that are active, pending, and sold. And then what do you see here again? 300, 300, 300, 700. There's the only one here that's really low is the one that we have in escrow. All the other ones are looking under threes.
All of them have a 3 or a 4 in front of them, and we have a 1 in front of ours.
Exactly. Again, under the median price point for that area, with other things that give it potential, upside potential, such as midterm, short-term rental. So people, you need to look at the multiple exit strategies, but the better the deal you get, the more exit strategies you have. So let me go ahead.
And we had a great question, Alex, coming from Diego, asking about why you're using 180 days on your comps. Usually, guys, we use all active listings, pending listings, and 180 days worth of comps. We just put the most weight right now on the current listings, the pending listings, and the 90-day or less. But we still want to have a snapshot of 180 days so that we can see where the market was and where it is currently.
Great question, exactly. And so you see here, 320, 350, we go through these comps. Because we're running out of time here, I want to answer some questions here. Look at this Fern one over here, it sold for 320. It is a bigger lot, it is a bigger property, but not by much. We look at that, we could do something just like that. Like that is easy for us to do. Look at carpet. Again, a lot of stuff that's not even brand new.
Just repainted that cabinet,
it
nothing
does have
crazy
a garage,
about this.
so I'm not expecting to get the same price, but it is a deal, right? And so we looked at the numbers. Let's look at the numbers. Our base case on that was like, hey, we think we're going to be able to get close to 290 on the property, or 290. 175 was our acquisitions price, 50,000 on rehab, 180 days, and it hits our numbers, 30%, 35,000. So make sure you're not just fudging numbers. Like that's what we really saw there. And then worst case scenario, although we should probably put the lower worst case scenario here. This is, I think, too optimistic. But again, even if I go pessimistic to 250, we're losing $3,000 on this deal, right? Actually, this is wrong. I don't think it would be 70, but again, You could play with these numbers
if it needed 70K. Yeah, I would say maybe 60 would be a better one right
60K, like we lose 13,000, everything hits the fan, it takes way longer, all that good stuff.
And guys, so going back to that question about estimating rehabs, like we just know we just did a house that was 744 square feet in Lancaster for 31,000. So 50 to 60, this house does need a little bit more work than that house. We're probably going to add a little bit more curb appeal to it because it is close to downtown, so it might have a little bit nicer finishes. So that's how it's just super easy to, using your past data points to get those estimates.
Yep. So this is the numbers. I mean, we don't want to go too detailed. I think you guys kind of get an idea of like, hey, this is best case, worst case, base case. We see that like, hey, this hits our numbers all day, has some upside, has the potential to keep for other purposes, and it just fits into our box, and we're growing and growing our presence. We will be one of the biggest buyers in Antelope Valley. That I will state right now. I will be spending a lot of time there. We will be for sure. And it's funny, recently too, I noticed that my last name Camacho, there's a huge dealership.
Camacho cars.
Yeah, come on. And that might not always be positive because used car dealerships are known for like scamming people or just getting over on people. But apparently they have a really good name and brand, and people do really, because I've asked people about that because they ask me every time they know my last name and I'm out there like, oh, are you part of the Camacho dealerships? And I'm like, no, but I like their last name. and then I'm even considering we're doing, the TV commercials and the billboards, because like, we could lean on that a little bit. We're like, hey, I want to buy your house, Alex Camacho buys houses. So we're definitely going to use that to our advantage in the near future as well. But any questions about that? The numbers.
Yeah, no, again, I think this was great. Alex, if you can go ahead and make me a co-host real quick, what I'd love to do is just open up the room. We'll go ahead and get everybody else on here so you guys can share the screen with us and, save this last 5 minutes or so here just for an opportunity for you guys to ask any other, follow-up questions that you guys might have about these particular deals. I know Zaid is asking if, we're going to do any kind of additional square footage, Alex, or ADUs on any of these properties because they are less than 1,000 square feet.
Not likely. The other one on 18th Street, I want to build the other unit, but I think that's a 2023 thing, not necessarily right now. And then the one over on Fern, it's just a small property. I just want that to cash flow, and then we'll get all our money out, pay out for, refinance, keep the property, just add another one to the portfolio.
Yeah, and again, it just comes down to what's your buy box, guys, and what your bread and butter is and what you guys are good at. For us, the ADU is outside of our buy box. It's something that we know and we can do, but it's just not something that we actively do because we like to just buy properties that are below market price for that area and fix them up to get them closer to that market price.
Yeah, if you guys got value from this webinar, please post it. Please get a subscribe video. Please share it. Also, we have the private Facebook group. We don't get paid anything for this. We just really want to give the game out. We've got a lot of value from attracting rock stars to our team, people to help us with some of the funding on some of these deals, and also people that like contractors and things of that nature. So we love sharing. We hope that you guys can also share that stuff as well. But I love talking about deals. I'm a deal junkie, as I like to say. So any final questions?
Anybody on the call? Yeah, anybody have any questions or any feedback? Again, I think we had some great questions from Daniel and Zaid, but anybody else who has a question about the deals we just kind of looked over, why we're investing in Antelope Valley, why those houses, let us know. And then obviously, we'll love to see you guys. We're going to announce just now.
Oh yeah, sorry, forgetting. Before you guys log off, we are hosting our next and last free real estate investor meetup, September 22nd. It's a Thursday evening, 5:30, 8:30 p.m. The link is there. Go ahead and sign and register. There's gonna be free food. Make sure that you register because we want to know how much food to allocate and all that. But it will be the last one. Last time we had over 250 deal makers show up.
Yep.
This will be our last one. Then we're gonna be doing some other type of events. So make sure that you show up. Love to meet a lot of you in person. Shout out to Ulysses. I see him on the call. He's always there. Roshan's there. He helped out with the volunteer work last time. So Yonis, what's up? I know a lot of you are regulars, but can't wait to meet you in person. I'll be in Hawaii for a couple weeks. Don't feel bad for me, but then I'll be back in LA, baby. And
guys, if you get a chance, please do repost about the event, the meetup. And DTLA, the main thing that we do with these meetups is we want to create a big networking event where you can meet other deal makers that are, going to help you out. I saw a couple people connecting on the call, Daniel and Diego, about, hey, I have MLS access. Let's connect. Let's see if we can do some deals together. That's exactly what the meetup is about. It's about collaborating. It's about abundance. And the more people we get in that room, the more opportunity we all have to meet that next person that's going to propel our business to those next great heights. So we look forward to seeing all of you guys out there at that meetup. It's September 22nd. It's going to be in the evening after work. So please, we look forward to seeing you guys out there.
Awesome. Hey, everybody, thank you for your time and your attention. We appreciate it. Hope to see you on the next one, and also in downtown LA on September 22nd. Let's go.
We'll see you guys.